Thank you, sir.
Thank you.
Thank you. All right. Test, test, test. Anybody need this phone, or you want it?
Yes, I do.
Yeah, I figured. He's got to close the deal while I'm up here. I'm pretty confident of that. I'm going to turn off my phone now. We've got to think about this. How's everybody doing so far? All right. So they gave me a little bit of time with you guys today, and I'm going to do my best to keep your attention. My name is David A. Perez, and today I'm going to share with you how to join the 3% Club. And this is a unique club. These are the people in the world that don't pay any taxes. These are people who live life of true freedom, that they have come to the conclusion that they can do better with their money than the government can do with their money. Amen? All right. We all know that, right? So I'm going to share that with you today, and I'm going to share a little bit about me, and so hopefully I keep your attention. If I get boring, please somebody throw something at me. I promise I'll try to keep your attention. Some of my team is here. Some people are here. You guys keep me accountable. And Mike, if I go over time, just throw something at me, all right? All right, so my name is David A. Perez. Number one thing, I'm a best-selling author. I'll talk about that in a minute. I am a tax and business strategist. I've been in business for 15 years, specifically in financial services, specifically taxes. I have a group of companies specifically in the tax space. We help a lot of people, thousands of people. In fact, we've done over 50,000 tax returns in my career. We've helped literally thousands of tax business owners do the same. And I have a few other companies. We're not going to go into detail, but I will tell you this. Today, the number one thing I do is I help people build their own economy. And I have a show called the Building Your Own Economy Show, and you can find that on YouTube, and I'll talk about that in a minute. So people probably always ask me, David, what do you really do? And as I get clearer on this, it becomes more and more apparent because I don't know about you guys, but in business, do you kind of attract like who you are? Is that true? Like you kind of get around people, and if for some reason the people that are kind of like-minded, they come to you. Those are the people that they want to work with you. Well, this is how it's been for me. And so today I help hyper-growth business owners minimize and eliminate their tax liabilities by using advanced tax and business strategies. Now, the one thing I get all the time when I say this, there's a key word up there, and they're like, David, what's hyper-growth? Anybody thinking what that is? Well, there's actually a definition for this. So hyper-growth is when a company experiences, or a person or a business experiences a 40% growth in 1 year. 40% growth. Now, there's three types of growth, right? There's just normal growth, which is usually under 20%, rapid growth, which is 20% or more, and 40% is hyper-growth. Now, I focus on hyper-growth people because, well, typically that's who I associate with, people who are on the way up. Is that you guys? Yes or no? I hope so. That was really weak. Come on. Are you guys hyper-growth people? Yes or no? Hyper-growth people are people who think big, who act big, who show up in a big way. They come to conferences like this. They're looking for the next thing that they got to take on, and they're looking to get to the next level in their income, and hopefully they don't want to pay taxes. Is that you? Yes or no? Yes. Okay. All right. I'm starting to get some energy in here. All right. So this is me. I'm holding the first copy of my book in this picture. Now, this is really important because I want you guys to know something. So I'm from a little town in Texas called Rio Hondo. Nobody's ever heard of it except for my team over here, but it's a little town, had 2,000 people. Now, I was born to a single unwed mother at the age of 18, and she had me, right out of high school. I was born into a world that was without technology, right? We didn't have Google in 1983. I'm 38 years old. We didn't have Google, or we didn't have ways to find out anything. And so when I was born a little different, as you can tell. I was born with something called albinism. Now, the doctors didn't know anything about that. I was probably the first kid they ever saw born into a Mexican family that was all white. Can you imagine that, right? So I'm pretty sure people were like, this can't be real, right? So I was born pretty different and unique, and the doctor told my parents, David is going to be a special little boy. And what he meant by that is he was going to be special, like special ed. Is that what they called it then, right? Today you can't say that because it's offensive apparently, but I was born special. And so they told me all my life I was going to need to be special. In fact, when I grew up, I was raised special, so special that I rode the little bus. I was taken and coddled by my parents. I was in special ed classrooms. I was told that I really wasn't going to amount to much, but that I was going to be very well taken care of. Which felt good. Anybody like being taken care of? Yes or no? Yes. Right? It was a good life. I'm not joking. My parents were really good to me. They were loving. My grandparents took me in at a very young age and raised me as their own. They were very good to me. They took care of me. They made sure I had everything I needed. They were not wealthy people, but they worked hard and they gave me everything they could. And every day they would tell me, we love you. We're going to take care of you. And it was a very good life. In fact, family was great. Growing up, I was picked on, though. Imagine I went to a school where I live, by the way, it's 99% Hispanic, so everybody's brown. And I was the only white kid in school. So it was a weird situation. Every day I was teased and picked on. I read a meme earlier this week, and it was like, only Mexicans, because I'm Mexican, by the way, I'm not racist. So. Only Mexicans will find your biggest weakness and give it your nickname. So they called me Güero, which means white boy. So that was my nickname growing up. So that's how they nicknamed me, right? I was called Snowball, I was called Whitey, I was called Powder, I was called every name you could ever imagine, and it deteriorated my self-confidence growing up. So growing up, although I was really taken care of, my confidence level had dropped to the floor most of my life. And so growing up, I had a great life, but I was very shy, I was very timid, I didn't speak very much, I wasn't very social, I just didn't do a lot of the things that most kids would do. I didn't play any sports, so I was very kind of sheltered, if you will. Now, at the age of 16, I come home from school, and I'm sitting, I get asked by my parents to sit down, and I sit down with two men. These two men are wearing suits, and my parents are sitting in the living room, and they say, sit down. And these two men asked me a few questions. And they were asking me things about, my medical condition, my strength, the things that I was doing. And by the way, when you're born with albinism, there's a few things that you should know. Your light sensitivity is pretty apparent, meaning I'm very sensitive to light. I get burned really easy, so I don't just go hang on the beach like you guys. So when somebody says, hey, let's go hang on the beach, I'm like, oh yeah, let's go get burned, right? I get that shit all the time, and I'm sorry, I didn't mean to cuss, but I'm like, guys, I don't want to go get burned. I mean, it doesn't sound very appealing to me. They were asking me about my condition and then whatever. And then when they were done, I said, so what's this all about? And they said, well, these guys are life insurance salesmen. How many of you guys are in insurance, by the way? All right, so we know a lot about insurance in here. And so I'm 16 years old. These two gentlemen are sitting across the table. I'm sitting there like, why do I need life insurance? Because at 16, what do you think when somebody talks about life insurance? You're going to die. And I was like, I don't feel like I'm going to die. At least I didn't think so. So I was like, do they know something I don't know? So when those guys left, I sat down with my mom and I said, Mom, why do I need life insurance? She said, well, just in case something ever happens to us, we want to make sure that whoever takes care of you has something to fall back on. And then I thought, somebody's going to take care of me? And an interesting thought that day happened to me, guys. That moment, and I was sitting there and I thought, although I've had a great life and people have always taken care of me, and I feel like I don't really have that much to worry about, I don't want to be a dependent the rest of my life. It was such a hard feeling for me. I couldn't sit there and just say, wow, this is my life. My parents are just going to take care of me. Mom told me, you can have the house when I die. And I'm like, well, that sounded cool at 13. At 16, I was like, this is not cool anymore. And without even knowing this, guys, what I did at that age is made a decision in my mind that I would never be a dependent again. That life would be under my control. I would make my own decisions. I would be my own person, and I would go as far as I could. The sky was the limit. And I did that. And for the next 10 years, what I did is I discovered myself. I found ways to adapt, to change. The biggest change, I'll tell this to you, and then I'm going to get on to what I'm here to present to you, but I'm going to tell you this. The biggest thing that was my weakness growing up was my appearance. People used to tell me all the time, make fun of me, call me names, bully me, tease me, pick on me. And so all my life, I thought it was the biggest thing that would ever, I thought that was my roadblock to get to the next level in life. When I was about 23, I was in the middle of becoming a real estate agent, or I had just become a real estate agent. And every time I would introduce myself to somebody, they would always remember me, but I could never remember them. And it was weird. I go to mixers, chamber meetings, everywhere. People were like, hey, David, how are you? And I'm like, crap, who's that? All the time. Anybody ever been there? Okay, well, this happens to me all the time. And then I had this, just an epiphany. Nobody can forget you. And then I thought, if they can't forget me, then I probably have a competitive advantage. Because in the marketplace, you got to stand out. And I'm already like a walking billboard. And I took that and ran with it, guys. Like, I totally took it and ran with it. I thought, okay, cool. So everywhere I go, like, I always start with that. When I meet somebody, even if I don't know you well or anything, I'll just be like, well, my name's David. They'll probably remember me. I always tell my wife, but they'll never forget me. And I walk into a building with my wife, anywhere we go, and they're like, hey, David, how are you? And then she's like, who is that? And I have no clue. And it just so happens that it just became the biggest challenge I grew up with all my life was the one thing that changed my whole life. And if you guys are going through something right now, maybe that unique concept, that uniqueness about you is probably your greatest superpower. And it changed everything for me. And so last year, Coach Burt, or maybe 2 years ago, forced me to write a book. Can't say forced me, but I went to a couples retreat and he cornered me, right? Anybody ever been there? I'm just wondering if anybody's ever been there. And he said, hey, man, you got to write a book. And I said, I wouldn't even know what to write about. And for some reason, this book came out of me in a few months. It's called Building Your Own Economy. And I share your stories about how you take control of your life, how you dominate, how you never, ever become a dependent ever again. How you take control, you build health, you build wealth. Nothing that can shake you or your family ever again. And this concept, the BYOE concept, if you ever see me wear a cap that says BYOE, that's what it means. So building to construct. Your belonging to a person. Own possession. Economy, the science of wealth. Interesting statement, by the way. It was Aristotle, I believe, that wrote that the economy is the science of household management. And the modern day Aristotle, who actually was the founder of economics and the whole term economics and economy, his name was Adam Smith. And he defined economics, the first ever definition of economics is the science of wealth. Economy means the science of wealth. And so I can talk to you about health, or I can talk to you about values. I can talk to you about a lot of things today, but I'm just going to tell you guys something. Wealth is the number one thing you guys need to be focused on today. Because money can solve a lot of problems. Yes or no? Yes. You all know that. I'm talking to the right people. I know that. So what I want to talk to you about is the wealth you can preserve. Because 30% of the money in your life is going to go to some form of taxation. Did y'all know that? 30% of every dollar you'll ever earn in your life will go to some form of taxation. Did y'all know that? 30%. That's a huge number, isn't it? So that means every day you worked all your life to give 30% to someone else. I think that's a bunch of bull. And there's 3% of Americans today that don't actually pay that. Would you like to be part of that? Well, actually, there's probably a lot more that don't pay it, but we can talk about them another time. I just caught myself there. There's about 63% of other people who don't either, but I guarantee they don't own an economy. I promise you that. So check it out, guys. Check out this graph, right? I know it's really hard to see, so I just magnified it here. See, most high-income earners earn over $200,000, okay? Most higher income earners make over $250,000. Now, I put two income brackets up here because this is a chart that tells you on the left is how many people are in the bracket, and on the right is how many of that bracket actually don't pay taxes. So to the right here, if you look at 500 to a million, 0.4% of them actually don't even pay one tax dollar. That means almost a whole percent of people don't even pay one tax dollar. And anybody from 200 to 500,000, actually 2.3% of them don't pay any money to the government. Do y'all want to be part of that group? They don't pay taxes. By the way, that means 90% of them do, which is probably most of you. And I might hate to say it that way, but it's not a bad thing. But most of you probably pay taxes, yes or no? And most of you have been told all your life you're supposed to, yes or no? Well, that's another bull, right? We're going to get through that. All right. So that's the 3% club right there, guys. If you get these two brackets right here, up to $1 million, and it even goes bigger than this, obviously we can go. So I'm going to teach you really quickly, because I don't have too much time, how to actually get to this club. So I'm going to tell you what we do, and I'm going to show you how you can do it yourself, okay? So the first thing you should do is do a deep assessment of your current business and financial positions. Now, this is really simple, okay? All I want you to do is just take a good understanding of what businesses you own and what type of entity they are. It's very simple. So I own the insurance agency, and it's an S Corp. Most of you understand basics of tax, I hope. Or it's a C Corp, or it's a sole proprietorship. One of those three falls into you. So you got to make a list of these things, number one. Then you want to review your prior tax filings. Now, you're probably wondering why. Number one, I'll tell you this. Most people don't understand this, but about 60% of people file an incorrect return, as far as their entity status. So they'll file a Schedule C when they were really a partnership, or they'll file a S Corp when they're really a C Corp, because they don't even know and they don't tell their financial, I can't say planner, but their tax advisor what they're doing. Review your current year financials. By the way, does everybody know, just a question, and you don't have to tell me how much, but does everybody know every month how much you're going to be paying to the government at the end of the year, yes or no? I guarantee very few of you do. Maybe you have a good guesstimate, which is good because you're making estimated tax payments. But just so you know, if you don't know how much you're going to pay to the government this year, you should know right now. We're hitting into the fourth quarter of the year. You should know because you need a plan not to give it to them. Last thing, review your investments. Now, some of you have real estate holdings. Some of you have stocks. Some of you have annuities. Some of you have all kinds of things. Crypto. Here's what I want you to do. List them all. And some of these are tax advantaged investments, and there's some are not. And you need to know which ones they are. Now, how do you find out the difference? I'll show you how to do that in a minute. All right, next, review your assets. Those could be your vehicles. That could be for your business, your equipment, your machinery, the things that you have. This is hard, by the way. Most people don't even know what they own. Y'all ever know? Here's a good way to check it. Just go to your last year's tax return and see if your vehicles are on there. Most times they're not, because whoever did your taxes didn't even ask you. Review your bookkeeping practices. Does everybody here have a bookkeeper if you're making some money? Yes or no? If you don't and you are making money, we need to talk. Now, I tell you this only just because I don't want you guys to think about bookkeeping as a chore or a strategy. I want you to think about it this way. See, bookkeeping, I'm going to tell you the difference between a good tax advisor and a tax preparer real quick. This is the difference. I want you guys to know what you're going to ask yourself which one is which. A tax advisor is going to tell you exactly how to mitigate your taxes and to give you an advantage when you go borrow money or you leverage investments. A preparer takes your financial statements, puts them into a computer, spits out an outcome, and says you owe this much money. That's a preparer. Anybody have a preparer? Yes or no? Don't lie to me. You might be lying about other stuff too, right? Preparers just give you an outcome. Planners tell you where you're going to be. Get a deep understanding of you. Now, I want you to understand something. What I want you to do to build your own economy is you have to know where you're going. You have to know how much money you want to make. You have to know what kind of investments you want to have. I would tell you this, in my book, what I talk about a lot is your ability to have a legacy. Everyone here should be striving to build a legacy, which is a remembrance of you when you're gone. So many people live a life, right? And they think that, well, they're going to remember the memories of me. Got it. That's cool. That only lasts one generation. Y'all know that, right? You could be a great parent, and you could leave all the Disney trips in the world. They're so great. But I promise you this, they only go one generation deep. What can you leave longer than the Disney trip? It's assets, right? The accelerated accumulation of assets is truly building wealth. The accelerated accumulation of assets is building wealth. All right. So then you build a plan, which is, where do I want to go? I'm going to go a little faster here. So here's an example. I'm going to show you a client we work with so you can know what you should be doing, right? Client comes to me, Harvey B, came to me with a $1.1 million tax liability. That's not his income. That's his liability. Anybody know anybody with $1 million tax liability? Anybody have one in here? It's very tough. It's a great life, though. So here's what we did. We lowered his tax liability to $623,000. Let me show you how we did it. Number one, we looked at his entities, and we lowered that by 16%. What we did is we realized that he was a S Corp. How many of you are S Corps? I know some of you. I can already point you out. And you're living the most tax-advantaged way. There's other ways to do this. You should consider maybe a C Corp that pays an S Corp. We could talk about that later. But we saved him 16% taxes just by converting some of his entities. We did asset evaluation. We went through all of his assets. His prior tax preparer said that they wouldn't use his vehicles that he used for work to put them on his tax return because it was probably not true. Anybody ever had somebody tell you that? I know I saw a Lambo out there. No, I'm just it's all business, right, Ryan? There you go, baby. But looking at all of the assets, I mean, truly looking at assets from equipment, machinery, vehicles, buildings, things that they own, and actually finding if they've actually been notated on a tax return. We added $395,000 in missed depreciation, which is a phantom deduction. It's the best thing you can add onto a tax return is depreciation. We looked at the current financials, and what we found is that a lot of their bookkeepers were putting like desks and computers and phone systems and phones. They were just putting them as expenses. Now, this is a big deal. Let me tell you why. If you don't categorize these things right, they become expenses, and you don't want to have them as expenses. You want to have them as a depreciable asset. Now, the reason you want to have them as an asset on your tax return is because you can add back depreciation so that you can have a higher income bracket when you go to borrow money, when you go buy the 60, the 80, the 100 unit complex, you can actually add depreciation back into your income. You can't add expenses. So whenever somebody actually puts on a tax return that a computer for $2,000 is an expense, you've actually lost the ability to credit that back as income. It's a huge deal. Also, we strategize. This is my favorite part. Anybody like real estate? I love real estate, by the way. It's the one thing you should think about investing every day, right, Coach? That's just the thing you got to own. So real estate, here's what we did. Guy came to me and he said, hey, man, I really want to get in real estate. We helped him acquire $4.3 million in real estate. $4.3 million. You're like, man, he must be rich. It's either give it to the government or give it to himself. Which would you rather do? He was going to give it to the government or to himself. Which one would you guys want? Right? There you go. So what we did is we helped him acquire this real estate, and he got a $1.075 million depreciation on his tax return. It's a huge number. And by the way, he owns the asset. He didn't give it to the government. We saved him $477,000 in taxes. This is just one study. It's a big number. Is that a lot of money? Yes or no? That's more money than most people make in a year. We saved. Now let me add one more thing. This is cool. We also increased his cash flow by $200,000, and it's all tax-free because those properties are income generating. So he actually is lowering his taxes. He's getting $200,000 more in income, which is tax-free. It's incredible. Anybody cool with that? Anybody want that situation in their life? Yes or no? Don't sound too excited, man. Am I that boring? There you go. So I just want to share this with you before I'm out. If you guys want to help doing some of this stuff, because this is important, just so y'all know. If you're not planning right now, you're going to get to the fourth quarter and your CPA, your tax advisor is going to call you around the December mark and say, hey, just so you know, you've got about pay $300,000 check to the IRS this year, or $100,000 or $50,000, and you're going to have to make a decision. Send the check or figure out what to buy. And you know what they're going to tell you to buy? No, they're not. You know what they all say, right? Go buy a new car. Right? You need a new truck, right, Jesse Latson? you need a new 2500 HD, right? Somebody needs that. Anybody want one of those? How many people actually needed a vehicle but still bought one because somebody told them to do it? Raise your hand. Your advisor said, hey, just buy it. You need a deduction. But you also just put yourself in a liability. It doesn't appreciate, so you don't actually get anything out of it other than just feeling cool. How many like to feel cool but be broke? That's a trick question, huh? So we'll help you understand this. We'll do exactly what I just told you, a review. If you guys want to hook up with me and do a strategy session, we can do that. I'll also give you the 17 most common tax strategies, or actually the biggest strategies you can use to implement even if we work together or not. You guys can scan that QR code if you'd like to work with me and schedule a session. I just want to end with something real quick. My belief today is that everyone has to protect the most important thing to them, which is their family, which is their assets, which in my definition is their economy. Now, in order for you to do that, just so y'all know, the only way you're ever going to do that is if you take your finances super seriously. Your tax situation is the most important thing to you because it's the one thing that will impact your cash flow forever and ever and ever and ever. I don't care if you're making $50,000, start protecting your cash right now. And there are ways to do it, even if you make $25,000, $50,000, $100,000, $1 million. I'm not just talking to people who are making millions of dollars. Everyone here can put a strategy in place to not owe taxes ever again. There are so many creative ways, and I only work with really good strategies. I'm not talking about the simple stuff like the Augusta rule and hire your children that you hear everywhere. I mean, those are good taglines and hooks, but those are just common stuff. You should already be doing those. I don't need to teach you that. We're talking about more advanced things. How do you buy real estate? How do you use and leverage the new, what is it called, IRA? The Inflation Reduction Act that had nothing to do with inflation, right? But it gave you a bunch of tax credits you probably don't even know about. Did you all know that there's a lot of tax credits in there that you can literally leverage to bring your tax? And by the way, just a quick side note, there are deductions and then there are credits. Which ones are cooler? Anybody know? Deductions or credits? This is a real question. Credits, because credits go against tax liability, dollar for dollar. A deduction lowers your taxable income. You want credits, guys. I'll show you how to get some credits. So if you guys are out there and you're thinking, this is not something I need to think about, I'm telling you, if you're on the way up, if you're on your hyper growth track, like I mentioned, this is the spot you need to go. You need to be thinking about taxes every single day. I think about it all the time. Every time I go out to dinner, I'm trying to find a way for me and my wife to be talking about business. Every time I go on a trip, we're looking for business. We're looking at real estate. We're looking for something to do because there is a strategy to never pay taxes again. And if you want to do that, let's talk. But if we don't, just so you know, if we don't talk, or maybe this is not something you want to do, let's just have a talk and maybe I can help your current advisor get some insights. We can do something with them as well. So I really appreciate you guys. Thank you so much.